Bam, bam. How's going? How's going? Yay! It is a Saturday. It is a Saturday. Welcome to Pass It On, and it's a great pleasure of mine to be here with you guys. I am trusting that you are all doing well wherever you are, and you can catch me out today, now, right now on Pass It On, and I'm trusting that you're doing great. Welcome to Pass It On. Whoop whoop! Yeah. What is Pass It On? So, just in case you have never been here before, this is kind of like your first time. Pass It On is something that we do every Saturday. I come out live and we talk about general life and we talk about, in particular, real estate, because I do real estate, I do property investments down here in South Africa. And that's what I do. And we talk about it so that you can pass it on. And where do you pass it on? You pass it on to others. The reason why I am passing it on to you is that I get the education from learning, right? That is number one. And then number two, I pass it on to you. Or number two, I do real estate every day. Okay, I'm not an estate agent. I buy properties for a living. That's what I do. And out of that, there's a business that's called M5 Property Addicts. I am not the only guy who works and who owns the business. I'm in partnerships with a number of people. We've got a fund also. Over and above that, there is people that earn passive income via our fund. This is an amazing place to be. But the reason why I come out to you on a Saturday and share the gospel of property is that you can do it in your own spare of time and you can go and you can start to crush it in your own space. And property is an amazing place. Property is an amazing space. So without wasting time, we come out to you every Saturday at 7 o'clock all the way to around about 7:30. You get to have an opportunity to ask me some questions whilst I am going ahead on this. So welcome, welcome. In the comments, I want to hear where you are watching me from. In the comments, let me know where you are watching me from. I enjoy knowing where you are watching us from, so which is cool. So yeah, so if you can hear me, just give me a thumbs up as well that you can hear me, so that we can continue there with the conversation. Yeah, awesome stuff. Right. So whilst we are at it, I just want to make sure that all of us we can hear each other. I see the guys that are on which screen is this one now? Okay, the guys on Insta, they're saying that they can hear me, and some people are saying, hey, this is the first time we're watching. You're watching from Krugersdorp, Kroonstad, Cape Town. Okay, good. I see you there. And there are some people that are watching us from Namibia. Awesome stuff. From Johannesburg. Where in Johannesburg? Johannesburg is a big place. Yeah, Johannesburg is a good place. So yeah, wherever, if you're watching me on YouTube, awesome. In the comments, you can add in there your comments. If you're watching me on Insta, awesome stuff. We can continue there. Right. So let's start the conversation. Today, I want to talk about particularly why property investment is important for you. For some people, they might be looking at this, they're like, well, I don't know whether real estate is for me. So I just want to tell you guys a short story. So back in the days, so property is not the first business that I ever started doing. It's actually maybe my number 4 business. So I was employed and I started off I was employed at the bank, and I rose up the bank like any other person. You're getting promoted, and then at some point I figured that out, that I wanted a little bit more. What was that? I wanted to travel. I wanted to, because I was traveling with work, but I was just kind of trying to find out how best can I do it also with my family. And that's the other thing that so I started trying to figure out how best can I do that. And I decided, let me start a business, a side business. It's called a side hustle, right? So anyone can start a side hustle. I'm going to give you guys 3 of my side hustles that I tried and why I stopped them, okay? So the first one was a car rental business. right? The first one was a car rental business, and this is long before Uber, Spotify, and all of these other guys. Spotify is the music one, eh? Yeah, so it's not Spotify. Yes, thanks. Right. So long before actually the likes of the Uber, the Bolts were around, I jumped into car rental. And I think the big players then were the likes of your Avis, your Tempest, and those guys. But here's the thing, and why I stopped doing car rentals. I realized that with the cars, it's an asset if it's giving me money today, but it's an asset that depreciates. Okay? It's an asset that depreciates. So, what do I mean by that? If you're going to a car dealer today and then you buy a car today, you come back with the same car tomorrow and then you say, hey, I want to sell my car. You see that if you bought it for 10,000 Rand, tomorrow it will be 9,000 Rand. So it loses value as the days continue, it loses value. I wasn't happy with that. But it was a good business. I made some good money out of it. And the second business that I tried out was that I was selling nappies. So I'll buy nappies at a wholesale and then I'll go into the township and I'll distribute them. And I made some good money on it. But I realized also, and the reason why I stopped is that I realized with nappies, I am continuously working. I'm continuously working. So there is no point where if I stopped working, selling the nappies, then I had no income, right? So the side hustle was a real hustle. So it's just as good now being I'm at work and I need to be at work again, right? Okay, making sense, right? As I go along. Okay, awesome stuff. The third business that I did was I became a farmer. I realized that people need to eat all the time, and I was like, yay, let's do that. And I went out and I bought a farm, a humongous farm, around about 8 hectares at the time. I put out some nice structures, and I went out, and we were doing 20,000 chickens at a time. And I was like, this is amazing, right? And I continued pushing, and then some flu, some diseases hit me, and it almost took me under. But here's the thing, why did I change my businesses? So car rental, nappies, farmer. Why did I change? The first one was that on the car rental, I realized that the asset that I've got in the business, it is depreciating. So not a cool idea. So that's why I stopped. Okay, but the money was good. And the second one on the nappies, I realized that I need to continuously work all the time. So if I stop working, then I don't earn an income. So you kind of like, you become a rat race. You're working. If you stop, no income. And then the farming part of it, the risk was a little bit too much for me. The risk was a little bit too much. So if all of these things now, they are all kind of like, there's something, they're giving me money, but if I change, is there another business out there that I can try out? And I then found property, right? I found property, and just like you might not know how to do property today. I'm going to give you an opportunity. So if you have never been to a webinar before, I'm going to give you an opportunity where you can join the webinar. And this coming Saturday and on Thursday, 7 p.m., we're going to have a webinar where we're going to be talking about properties, right? We're going to have a webinar where we're going to be talking about webinars, a webinar, and we'll talk about properties themselves. What about it? All about investing in property, how you can invest, the cool way, how to make money in it, and things like that. That's what we're going to be talking about. And I think that especially if you have never been, so some of you have been to like a whole lot of like, I want to say either webinars or you've been to seminars and things like that, and you haven't found that thing. Well, I want to invite you to our property webinar that's coming up on Thursday and coming up on Saturday. So it's the same webinar, but I'm accommodating for people that I might be going to work on a Saturday, so you can come on Thursday night, or the other way around. Okay. So if you're interested in that, literally in the comment, I'm going to drop the link, and then you can join that webinar. Okay, does it make sense? I think it makes sense. Right. Now, what I want to also mention here, right? So for some of you who might be like saying, hey, TJ, how can I get through to it? It is literally www.m5propertyaddicts/accelerating your property portfolio growth, right? That is the link wherever you could be watching that from. But I am going to drop it in the link, not in the link. I am going to drop it in the comments. So I got a couple of people that are watching us all the way from Iraq, okay, Cape Town, Port Elizabeth, Namibia, and that's awesome stuff. So why did I then jump into property? Why did I then jump into property? Okay, I am the only child in my family. So for some of you, you might know my story. Both of my parents kind of like deserted me, and I'm the only person in my family. So my father went on to have other kids elsewhere, and my mother went on to have other kids elsewhere, but they never got married. So I'm the only person that they ever had. I'm the only child. So for that reason, actually, my dad kind of like left, and he went on to do his own thing. So I have no father, you know. But out of that, I also became a family man. So I got married, and I now have two kids. And I was trying to figure out, whilst I was doing the car rental, the nappies, becoming a farmer, there was one thing that I was trying to figure out. I knew very well that, seeing that I don't have a father who is going to pass on some wealth to me or some inheritance to me, then I don't have anything to fall back on, right? I don't have anything to fall back on. So I have no legacy to carry on from somewhere else, because my father at one point, he was there and then he was never there. And I want to challenge you to say that if you're in a position, in my position, where you probably don't know your father, or you are the first person in your family, then I just want to challenge you to say, how best can you change your family tree going forward? How best can you change your family tree going forward? So for me, changing my family tree, I literally say to myself, I want to create wealth. And I asked the question, does car rental give me that? And the answer was no, because my assets was depreciating. Okay. And I realized that the more I was working in the nappies business, even though now I was a family man, potentially I might not be able to have the time to spend with my family, because I am working at my 9 to 5, and I still need to come back home and also work on this business. So we all have 24 hours. So how best can I do it? And then on the farming thing, my risk was a little bit too much. The risk was too much. So I'm like, how best can I mitigate that? So I want to give you 5 reasons why I went into property. And if these reasons resonate with you, if they make sense to you, then I want to see you in the webinar. Okay? So the first one that I've already told you, or the one that I've given you a challenge on, is, do you come from a family that has money? And if the answer is no, but you want to create wealth for yourself, and you think that property is that avenue, there's many ways in which you can create wealth, by the way. I'm not saying that property is the it. This is what I understand, because I've been doing it for a while. So I understand that. So I'm just extending an invitation to say, hey, come through and do what I do. I'll show you the ropes. In the webinar, I can show you how it's done. Okay. So why did I go through now to start learning property? So it's 5 reasons. I've given you one already. The second one is that if you're wanting to create wealth, then property can be a vehicle for you. So that's the second reason. The third reason that I want to share, and I'm just going to continue counting and say the next reason, so you can write it down yourself, is that property gives you cash flow without you having to do the work continuously. So you can, and this is what I need you to understand. If you are coming through to the webinar, it's not about investing. It's about investing in yourself. I want you to invest in yourself. So I'm inviting you to come into the webinar so that you can learn. So you need to learn. You get the stuff in here and then you go out there and then you implement. So I'm not going to teach you, hey, you're going to earn passive income. Hey, this is so easy. No, there is work. And if you are dedicated, you want to change your family tree, then come through. Okay? But if you don't want to be changing your family tree, you want to stay employed, you want to be in your own little corner and not grow, and nobody is going to change your family tree for you, that's okay. Stay in your corner. I don't care. Those are the people that are going to be coming through with me. I'm going to care about those people. And we're going to continue doing this for the rest of our lives. And we're going to change our family trees from where we are. So my family tree starts with me. The family tree starts with me. So I am starting here now. Okay. So the next reason is that I can create the cash flow. So meaning that I have profits. I do a bit of work and then I get profits. And I can get these profits for the rest of my life. That is the key reason. If you're going to do this for the money aspects, this is potentially the one reason that you can say, hey, I'm going to get some money here. The next point is that unlike my car rental business, my property business, it gives me what is called appreciation. So what happens? I buy the property today and I go to the bank, and then the bank gives me some money to buy that property. After about a year or two, property in South Africa right now, depending on the area, at average, we are appreciating anything around about, let's just call it an average 7%. So which means that your property value that you're buying this year, next year will be around 7% appreciation. That's kind of like the average, right? But in some areas, they are in a double digit, so which means that you could be 11%, you'll be 12%, right? And you can even do what is called forced appreciation. And these are the things that I'm going to be teaching you in the webinar on what does these means and how can you do it. So I've put in the link. You can jump onto the link and then you can learn how you can come through to the webinar. It's on Thursday at 7 p.m. And also it's also going to be on Saturday at 10 p.m. this coming week. Yeah. But you don't have to attend both of them. Just attend one and leave space for the others. All right. Okay. The next reason over and above cash flow and over and above appreciation is that this is the one that I totally love, right? This is the one that I totally love. And a lot of people don't understand this stuff. And this is the reason why I'm having these webinars, so that I can be able to pass it on. Remember, this is all about pass it on, right? And that's what we call this Saturday show. It's called Pass It On. I'm passing it on the information to you. So the next reason is that property is the only asset that you can borrow some money. So you're using what they call other people's money. And if you don't understand what other people's money, it's okay. And by the way, that word has been so coined with so many people, and it's kind of like overrated. But I can show you as well to say, if you've bought a property today, okay, and in a couple of years, you can go back to the bank. And then this is the only asset. You can do your research around this, but property is the only asset where you can go and buy, and you can go back to the bank again and borrow more money on top of what you have borrowed. Okay? Does that make sense? So you borrow today to buy it, and you can go back again to borrow some more on the same asset. Now that is power, that's gold, especially if you understand how to work around debt. So that's the next point. The other point that I still want to speak to you about is that property has a low risk. It's got a low risk. Why do I say that? Property by nature is that you can physically buy it today and you know where it is. You can go and touch it. You can go and hug it. You can go and kiss it. It's physically there. So it cannot just disappear tomorrow, right? And for that reason, it's a low risk asset. But if you're buying it correctly, right? If you're buying it correctly, it can give you a higher return or even a higher yield, right? So you can make more money on it. And I know people are always saying, where you're getting a higher yield or a higher return, your risk is high. Not necessarily so. If you've got a good property and you've bought it in the right way, and these are the things that we're going to be talking about in the webinar on how to buy the right property, right? Where is it? We will talk about those things. Okay. So prepare around about a 2 hour to 2.5 hours in the webinar. It's going to be so much informative on this coming Thursday. And if you know someone else who will have value in it, register for them or ask them to come with. It's online. It's 2 hours of your time. It's free. And what are you going to lose? Nothing. You're going to get information. That's what you're going to get. That's what get you started. Or if you have started and some of these things that I'm talking about are a little bit foreign to you, and you're like, but what does it mean? No problem. I can help you to get you unstuck and accelerate on your journey. That's why the program is called Property Accelerate. To accelerate so that you can bank more money, on your properties. Maybe today you maybe have 5-6 properties that you already have, but you're not making money out of that. I will help you to make sure that you can make some more money on it. I'm doing it. My partners and I were doing it. We've got how many tenants now? Just above 200 tenants. Students, we've got just above 300 students. And yeah, we're doing it. So I'm in it every day. I understand how to do it. And I'm passing on the message to you. The next one that I want to share with you, the next reason why you should also be considering property is that you can make money today in the cash flow that we spoke about, and you can make money in the future, tomorrow, and the generations to come, and the generations to come. Okay? So you can make continuous money. Does that make sense? And you can make money forever, actually, because the property doesn't disappear, not unless there's something catastrophic that has happened. I hope this makes sense. So the bonus that I want to give you is, and this is the gold part of it. Once you start learning, this is the last point that I'm sharing with you all. Once you start learning, right? And I'm not going to recommend this at the beginning to say, do this at the beginning. No, I'm going to say to you, we'll start with the baby stuff. And now when you start learning a little bit more, I'm going to share with you how you can learn to be a little bit more creative so that you can utilize what is really called other people's money. So how best can you buy property without using your own money, right? I do that every day. I've never put in any money actually in all the deals that I've done, but it doesn't necessarily mean that you don't need the money. You need the money to educate yourself. Once you get educated, then yes, you have the ability to buy more properties without using your own money. I see a lot of people, they come to us and they speak out there. Is it possible to buy properties without your own money? Yes, it is possible, but you need to learn how to do it, right? You need to learn how to do it. And I'm giving you an opportunity here to say on this coming Saturday at 10 o'clock, you can choose. The link is in the comments. You can jump in it right now and you can join the webinar. And I will then see you either on Saturday at 10 o'clock or I'll see you on Thursday night and then we'll jump in to talk about it. So we'll go a little bit deeper. Today I've just given you the reasons why you should do it, right? But I will show you some proper deals. I will teach you a couple of tricks that you can implement and you can start making some good money. Well, as it is today, it is a Saturday and we generally do talk about this. Pass it on is I give you an opportunity where you can ask a question. And I know that I didn't share with you guys to say, yes, you can ask some questions, but I'm trusting that you're always coming through here every Saturday, 7 p.m. We talk about anything and everything around property. And yeah, so are there any questions? I'm going to give you a moment whilst I'm just going to greet a couple of people that joined us. And I'm giving you an opportunity so that you can ask a question. Pass it on. It's about asking questions. That's what it's all about, right? It's about I'm helping you. I've got the information. I'm learning, and as I'm learning, I'm doing. And remember, the best friend that can teach you stuff. There is a teacher that is called doing. That teacher is a good teacher. They will teach you stuff. All right, awesome stuff. Mola, how's it going from Namibia? How's it going? Esna Best from Port Elizabeth. How's it going? Nobuhle, Cape Town. How's it going? Christopher. Christopher is from Iraq. Okay, awesome stuff. Those are the guys that are watching us. I think it was there via the YouTube channels. And by the way, the guys that are watching us on YouTube channel, you can literally take the link at the end of this video and you can pass it on to the people in your community. And this is what it's all about. I come out, I give you the information so that I can teach you. I do that every Saturday. I come here and then I teach you something, and you take it also to teach other people, right? That's what it's all about. Some of my guys that are on Insta, Plantla, how's it going? Lebo, Musa, Afro, Tule, Amzita, Mrs. Nula, Bantu, Mrs. Nula, K, Lebo, Michael, Tim, what's happening, brother? I'm going in here. Right, Litley, okay, awesome stuff. All of these guys that are tuning in. Nikki, Terry, right. The governor, you here? How's it going, man? Right. The pianist, okay. Black Yamazi, right. Awesome stuff. There's quite a lot of you guys. I'm just throwing in the names that I'm seeing whilst you are asking a question. And head to the entrepreneur. What's happening? Hey, King, how's it going? I see you, King, there. Veda, Linda, Capello, Peculiar, Nazo. All right. Is that a person's name? Nazo? Okay. Yeah, I hope it is. James, what's going on, man? Katleho. All right. Awesome stuff. And then some guys they're saying that. So I've got a question on Insta. Someone is asking, is Cosmos City a good area for rental? Katleho is asking that question. So let me answer the question from Katleho. And by the way, you can type in your question wherever you are. And my job is to answer that question for you. All right. Okay. That's what it's all about. Pass it on. Every Saturday from 9 o'clock to from 7 o'clock to 7:30. Okay, is Cosmos City a good area for renter? I don't know Cosmos City, right? That's number one. That is my biggest problem. I do not have any investment in Cosmos City, but here is what I'm going to ask you, Katleho, right? The question that I want to ask of you is that what is driving people to stay in Cosmos City, right? That is number one. So where are they formally employed, or those people that are staying there? What do they like to do, right? So if it is a good area, what is a good area? I did a video on here on YouTube, Katleho. You can literally jump onto YouTube and you can go and check out a video that is called the best area to invest in. Now, the best area to invest in is very similar to what you're asking me here, is that is Cosmos City a good area? It might be good for you, but it might not be good for me, right? Or it might be not good for the next person. It's just like good as asking, is Susan a good wife for me? Or is she a good wife? She might be a good wife for you, but she might not be a good wife to me, right? I hope that makes sense. But now I want to help you on how you can identify to say that this is a good area for renter. Number one, how much stock is in the area? Do you know the area very well? If you know the area, how do you know the area? So you go there, you walk the streets, you need to be comfortable. You need to be comfortable. Remember, this is an area where you're putting in money, right? And so you need to be comfortable. That's the first thing. Number two, you need to be able to walk around freely in that area, because that's the area that is going to bring you some money. Number three, what is in that area that brings people to that area? Okay. Four, what is the demand in the area, right? So yes, if there is people, what is bringing them there? Maybe it's workplace, maybe it is the airport, maybe it's industrials, maybe there's a school, maybe there's a hospital. But what is the demand as well? Because you could be creating 2 beds when the demand is bachelors, or you could be creating bachelors when the demand is 3 beds. So what is the demand, right? How do you check out the demand? Well, you can ask your local estate agent to say, hey, have you had people asking you about X? What are they saying? What are they looking for? Or you can literally put out an advert, a dummy advert on Gumtree or something like that. And you can say, one advert will say room rentals available. The other one will say 1 bachelor available. The other one will say 3 bedrooms available, 2 bedrooms available, and see which one the people are going to like, right? So if you got more leads on 3 beds, then yes, it's a good property rent. It's a good area, rental area for 3 beds. So you go out and you buy your house and you make it a 3 beds. Yeah. So remember, this is about business, right? This is about business. And guys, these are the stuff that we speak about in the webinars, and we dive into details around it. But good question, Katleho. I'm hoping that I have answered your question there. Right, I'm going to jump in onto another question. Someone is asking us another question. Right. I don't see any. Okay. Lebo is asking, how is this how to attract investors? Or okay, I don't know. He didn't finish that question there. Right. Okay, let's go on. Okay. Right, let us see. There are no questions there. I am just looking for questions. And if there is no questions, hey, I am happy to go and chill out with my beautiful wife and family so that we can hang out. Another question that's coming through from James. James, how's it going? Thanks for hanging out with us. Discovered you as I was recently in South Africa and loved it. I am from the UK and Congo. Whoa, that is a good mix, brother. So he is from Congo in the UK. Awesome stuff. That wasn't a question, that was a comment. Well, I also like comments. Yay, isn't right? Okay, cool. Another question that's coming through. What is the other question? This question here is coming through from Mrs. Nulu K. Hey, how's it going? Welcome aboard to Pass It On. Right. I'm hoping that you are passing it on. Right. I've got the button and I want you to pass it on. Best place you can pass it on is jump onto our YouTube, M5 Property Addicts, get a link and pass it on to the other people. They will get this exactly what it is. Right. So Mrs. Nulu is asking the question, what to when you find out that the municipality is the worst ever, yet students are in demand? Okay. I get the gist of the question there. It almost sounds like Mrs. Nulu is, I think she was typing. You know, when you're tapping on the cell phone, some other words don't come. And but I get you there. I think what you're trying to say, Mrs. Nulu, there is you might find that you are in an area and there is a student's demand, student accommodation demand, but actually the municipality is not allowing you or not giving you the zoning that you are looking for so that you can do student accommodation. So there's a problem there, right? So she wants to do student accommodation. She's found a house and she wants to do it, but obviously she wants to do it the correct way and getting the right compliance in place. But now the municipality is not allowing it. It's not giving it. Or should I say maybe she's applied, but it's taking a bit of time. I would say if you have to go to Mrs. Nulu, go through onto our YouTube. In the description of this video that I am doing right now, you will see there is a comment there of a town planner. There's a guy that I utilize. His name is Dumisani. And Dumisani is a very good town planner to us. And he knows how to work around this because maybe you might not need to do a rezoning, which will take in a lot of time. you might need to do an application, consent application, which takes a couple of weeks. And he's a good town planner. He understands student accommodation, and he can help you out. Is that all right? Okay, awesome stuff. I'm hoping that I've helped you out there, Mrs. Nulu. All right. Let us go on to the other question. The other question is coming from Amos. Amos, how are you doing? Welcome to Pass It On, and we come out on Saturday, 7 p.m. all the way to 7:30. But if there is more questions, we can go on and answer these questions. All right. Amos is asking the question: would you consider Olivenhosch? Oliven, I know this place. I've passed through there a couple of times. Olivenhosch. I think I pronounce it correctly. It is there on the what is the other? On the N14 road. I know that area. Okay. In Centurion, there's quite a lot of people, nearby complexes in the estate. Oh yeah, I would consider that place. Because I kind of like, I don't know the area, but I've passed through there. So I'm just going to give you guys a description of this area. This area here, I think it is not even more than 5-10 years old. And Amos is asking the question, is it a good area to be investing in? Yes, Centurion, I think so. If you have to go out and look on the report, go on to Property 24 and see from an investment perspective, people that are buying properties, what has been the prices ever since Centurion came to be. Remember, Centurion came into the mix around about, 2000, somewhere there, and properties have been going up like this, right? So you might be late in terms of buying, but hey, it's okay to start. Doesn't matter where you are, it's okay to start now. But that particular area there, Olivenhosch, I think it is, I want to say it's a middle class area. It's not really like a hardcore township, kind of like, because the houses there, I haven't seen anything less than 500, if I'm not mistaken. But the point that I'm trying to make there is that it's an up and coming neighborhood. It's an up and coming neighborhood. So why would I want to buy in an upcoming neighborhood? It's because it is fresh. I'm buying newer properties, and over and above that, the demand for Centurion, people are going to be working in the nearby Midrand. There is a demand around even Centurion itself. There's workplaces very close to the airport, very close to Lanseria. You can cut across via the other areas. You can cut across going to the Ora Tambo. You can cut across going to Johannesburg for some work. So Centurion is kind of like in the middle. You can cut across even going to Pretoria as well. So it's kind of like in the middle there in terms of many places. So yeah, I would definitely jump on an opportunity to invest in that area. And also a lot of those farming areas in and around that area, they are beginning to be turned into complexes, right? So obviously our building rates versus properties that were built like 5-10 years ago, the building rates are more expensive now. So it automatically starts pushing the prices of the neighborhoods higher, right? But there's a lot of other things that I would consider there as well. Am I buying in a complex? Am I buying in an estate? I personally don't like buying in an estate or in a complex, not unless if I'm doing something cool like Airbnb. Why don't I like doing that? It is because there is the big brother. So even if I'm doing the Airbnb, maybe in the complex they might not even allow Airbnb. Yes, they can allow you not to allow you to do Airbnb. It just depends with the body corporate. But remember, you are the body corporate as well. So if you're not attending the meeting at the body corporate, then those that are there will make the decision. All right. Okay, good stuff. I'm going to go to another question here. This one says, how much can it be to invest in my first rental property? Ooh, okay, right. That question there, interesting question, right? You can hear my sigh, isn't right? I don't know what is your income. But definitely, if it is your first property, I always say go for something that's simpler. What do I mean by simpler? What I basically mean is that because I don't know you as an individual, I would not jump in and do a complex deal, right? What is a complex deal? Like a building and you've got 20 units and it's a mixed use. I would say for your first property, go for a normal house, a freestanding house, maybe R1 million or even like 2 million rand. And you've got 3, 4, 5 tenants that are staying in it. And it's a simple house, it's not complicated at all. Preferably, if you can buy it and everything else is in place, awesome. Or you can add in a little bit of value if your money permits you to buy within that range. If it's not permitting you to buy within that range, then go lower, 500. Or even don't even go and buy anything. Practice a strategy that I call rent to rent. What is rent to rent? I've got a property, you come to me and then you rent out a property to me, but you rent it on to the next person. So you rent it to me for 2,000 Rand and you rent it to the next person for 4,000 Rand. And you can now test to see, is this property thingy the thingy that you like? Because a lot of, especially for first timers, right, you might want to jump into this and then you go and spend 2 million and you realize, whoo, no, this doesn't work for me. I think I want to stay in crypto. There's many ways to go to heaven of wealth creation. I chose property because it's less risky. So if you understand it, you want to start small, learn fast, and grow fast. I hope that makes sense. All right, awesome. Let me go to Shivan. Shivan, how's it going? What is the best return on investments you have on a rental property? Ooh, ooh, ooh. What is the best? Yeah, I suppose you're asking me here. What has been my best return on a rental property? Right. Are we talking here cash on cash? So I've gone out to buy a property and there's a little bit of my money in the deal. So that's a cash on cash return. If that's the answer that you are looking for, I have gotten through. The best that I've had was around about 50, between 50 and 60%. Okay. But my best one has been infinity returns. If you don't know what infinity returns, I am going to just give you the definition here. Infinity returns whilst we are talking now. So that's the best one, right? Infinity returns, right? What does that mean? Infinity returns are achieved, right? I'm giving you infinity returns definition. So that's my best, that's my happy place, right? For me, it beats return on investment, right? So infinity returns are achieved when you no longer have any money invested in something. So let's replace that something with the property. Make sense? So infinity returns are achieved when you no longer have any money invested in a property, but you still own it and it is still generating income for you. Yeah, that is my happy place, right? Where is return on investment? Okay, return on investment, right? Return on investment is a performance measure used to evaluate the efficiency or profitability of an investment, meaning that you have put in money, right? So that's what is a return on the investment. So you've put in 100 or whatever it is. So if you get another 100, that's 100%. If you get 20, that's 20%. So that is a return on investment. But this could be a little bit complicated, Shavina, right? But the bottom line of it is that My happy place is not to see returns or return on investment on my money. I'm aspiring all the time to get what I call infinity returns, right? So 50% doesn't tickle me. It's like, yeah, okay, I know at the bank we're getting like a 7% or whatever the case is. By the way, at M5 Property Addicts, we give you 14% on your money, right? So yeah, so Shavana, it really depends on what you're looking for there, but that's you can achieve that, right? But you need to learn how to do it. So join us for the webinar where we'll teach you some of those tricks. Someone else from here, they've got a question. Remember, I am just dealing with questions here now. We spoke about why you should be getting into the game of property, and I give you my 7 reasons why I should be doing that, and some of the businesses that I tried and why I stopped doing those businesses, mainly for the reasons that there was less appreciation on one business. The other business I was working hard. The other business there was more risk in it. And in property, I am turning that around. So some of my properties, they're giving me infinity returns, meaning money. I own the properties, but I'm earning money out of it. And you can do it too. You can do it too. And that's why I'm having the webinar on Thursday and on Saturday. Right. Let's jump on to the next question here. Hey, TJ, how's it going? What's happening? I don't know this person here. They look like I don't see their name, sorry. So, yeah. But their question is, if you have couples if you have a couple of offers accepted on your table, what is the best way to reject some of them without breaking the relationship with your agent for future deals? What does that mean then? So does it mean that you have gone out there and okay, so I'm just trying to answer that question there. If you have a couple of offers accepted on your table, so which means that you are the one who's looking for the properties, and you've gone out, you've put in 5 offers, and all 5 now has been accepted. And what is the best way to reject some of them? So you are the buyer here, right? That's what I'm gathering from your question. And your estate agent has been working with you, but you want to continuously buy from them. Awesome. Have the conversation with your estate agent long before you already put in these offers. So your estate agents need to understand the nature of the game. What do? You are not a home seeker, you're an investor. So when you send out 5 properties, 5 offers, and then the very one that is the gold, out of the 5 is then also accepted, and you only have money for that very one, then you need to speak to your estate agent before and after and say to them, look, this is the gold. I'm going to buy this one this time around, but I think we need to keep these ones also. I'm going to reject them. But now if you're the buyer, you can't really reject. You need to make sure that you have special conditions in your offer to purchases so that you can reject, or you can now move out without having to continue with the transaction, right? Now, a lot of people don't understand that. They just put in an offer, they don't put in conditions. By the way, there's special conditions for every special deal. There's no copy and paste of the conditions. So be careful when you're putting in offers out there. You could be liable for the estate agent, for wasting time on the estate agent. The seller can also sue you if they want to. So read your terms and conditions when you are signing these things. Okay, awesome. I am going to go to the next questions. Right. Oh, oops. This person here was also talking about with the right suspensive clauses in place. Yes, you're very right. Okay, I hope I've answered your question there. What is better, to build a house or to buy an existing property? Right. I'm going to answer this question from a number of angles, right? From a number of angles. Is this a house that you are going to be staying in? We don't really talk about that here. We talk about investing, right? So I'm going to talk about it from an investing perspective, right? So is it better to build or to buy an existing property? I'll give you an example. I bought a building not so long ago, and it's about 30 units in it, and within it's an old building that we turned around and used to be 1 beds, and we made it to be 2 beds, and there are some things that we forgot, and I want to say forget with a very loose word there. They were functional at the time, but immediately when people started moving in, we started realizing that there were some other issues. So, for instance, plumbing. When we moved in, the building was fully functional. But now, when we had more people, remember when you got 30 people in a building, that's potentially 30 times 2 or times 3. So your plumbing now is beginning to work a little bit harder. What we thought could run away from an expense at the beginning of the project, it actually hurt us now when people had moved in, and we needed actually to rectify that after the project. So we had to renovate and things like that. Became a little bit costly for us, and that was a lesson learned. With that experience, would I go and build a new building? Yes. Why? Because it is clean, it is fresh. I have less maintenance than an old building. However, on the one side, you might buy a building, and that building is much cheaper to buy. So not so long ago, I bought a property for a 3-bedroom house with a cottage at the back, pretty rundown, but I bought it for 200K, right? Can I buy a piece of land today for 200K? No, I cannot. So it really depends. It depends with a couple of things here. It depends on what is your crazy empty. It depends with your strategy. You need to learn your strategy. What is your strategy? Are you comfortable with your strategy? And just run with your strategy. Okay. And if it's building, stick with building. If it's doing renos, do that. I do both, right? In our business, we do both. Why do we do both? Because we've also seen some buildings, we can buy them at a good rate. Okay. Now, Shavina, well done. She's been active here. So she's asking the question, is it a she? I apologize if you're a male. Sounds like a female name, right? But it doesn't matter. So Shivan, it's Shivan. Sorry, I corrected myself there. My pronunciation is going out of the window, man. Sorry, Shivan. Okay, I'm looking at building a unit. I am looking at building a unit using a new technology. Okay, new tech. Any advice on this? And if tenants like this, meaning can it be rented easily? Okay, so Shivan is a guy. All right, good. Well, there's a guy who, so I don't know where you are, but if you are in Johannesburg, there is a guy who built a property out in next door to GP's police station. GP's police station. And it's a container, they literally built container homes, right? In my view, it was a very good option because containers are cheaper, you can turn them around very easily, and you can make them a home. And however, I do think that their finishings was not strong enough, or should I say, was not attractive enough, and people really saw that it was containers, and the uptake wasn't wow. But is he making money today? Yes, he is. So it took up a bit of time for him to fill up. I've been there a couple of times. I've got an interest in container homes. I've been there a couple of times to see whether it's working or not. And I've always been checking what is the occupancy rate in his building. And I'm always going there as a tenant to say I'm looking for a place, and there's always a vacant place. Right. So this is a new concept. So if we are going in with a new concept, something that hasn't been tested before, does it look sexy? Right? Can people see the difference of what you are presenting other than bricks and mortar? So it's like in our market today, if we are going to have the new cars that are coming up, electric cars, can you see the difference? And if the difference going to be upper, not an upper class, but is it going to be an advantage? Then people will jump onto it. It's a new product. We all jump onto our insurance when they came in. Didn't mean that Salam wasn't good. It just meant that they were offering better service and things like that. So we jumped onto the new products and the assurance. We all jumped onto Capitec because of the services that we're getting to Capitec. By the way, I don't have a Capitec account. I'm not too sure why I'm talking about Capitec. But the point is that it's a good product, and the good product is there, right? And where there is a good product, demand will be generated with it. That's what it means. That's how I look at it. I look at it from a business perspective. Is there demand, and can I serve the demand? Right. Okay. What is your take in Potchefstroom, seeing that you have invested in this area? Crazy T is asking me about Potchefstroom. I like it. It's a cool neighborhood. I do think that it's got potential. I do think that it can work for student accommodation. We are heavily involved in student accommodation, in particular in Poch. I also like it for the fact of affordable housing. I see that there's lots of construction around affordable housing, especially into new developments. So I do like it from that perspective. And it's a nice, quiet neighborhood, nice, quiet town where you don't have it's not a lot of crime and things like that. It's a very homely neighborhood, so you are catering more for the family orientated client. So yeah, I'll jump on it anytime. Michael Coqueto, how's it going? Welcome aboard to M5, and this is Pass It On. We come out every Saturday, and we are here between 7 o'clock all the way to 7:30. But we are almost getting into 8 o'clock. I'm going to be jumping off on 8 o'clock. I'm only going to 8 o'clock because last week I had a family issue and I wasn't able to come out live to you. That's why I'm giving you your 30 minutes from last week. I apologize. I did send out an apology last week. So Michael's question is, hey, TJ, what's happening? Can I extract equity from my 2 years property to finance another deal? I never negotiated the asking price when I bought it. Michael, the short answer is yes, right? That's the short answer. The intricate of it might result us in a no, okay? So why would I say yes? Depending on how much you bought it. So you might have bought it, yes, you're saying that you didn't negotiate, but maybe you bought it as a below market value. So what do I mean by market value? So maybe the value of the property, the two properties that you bought were, let's say, $1 million each, but the seller was selling at 750 and you just bought at 750. But actually, if you double check on your property value today, you will see that your properties are now worth $1.7 million each. So for that reason, 7%, right? We just make an assumption here. The 7% is the appreciation of the last 2 years, or let's say 14%. And the difference of the 750 to the 1 million, so that's your equity. So instead of me working out the dummy answers that I am pushing on now, let me give you a step by step on how you can do it. Okay, you got a pen and paper there, Michael? Are you ready? Let's see whether there's people there on the Insta. There's a couple of people that have asked some other questions on the Insta. I'm hoping that you are going to be coming through to meet us. You're going to be attending the webinar that's coming through, and the webinar that's coming through is coming through on Thursday. The link is in the comments, and on Saturday, and we can be talking about more property investments, and I'm going to show you some tricks, just like what I'm going to give Michael now. Michael, the first thing that you need to do, if they are residential properties, reach out to an estate agent and ask for the estate agents to do an evaluation on your properties. It's free. Okay. And both your properties, if they are R1 million each today, then you now need to say, okay, fine. How much did I pay them? Did I pay for them 2 years ago? So whatever the price that you bought them at, then you subtract the two. So your value today, how much you bought them 2 years ago, what is the difference? If there is a difference there, and the difference is significant, let's say 200,000, let's say 300,000, right? That's your equity. Even if it's R1,000, it's still your equity, right? But here I'm now talking in relation to what you're trying to do, which is to go and buy more properties. But what if they are commercial properties? If they are commercial properties, you can't go to an estate agent. An estate agent can't, generally, they do not know how to evaluate a commercial property. You need an independent evaluator. Independent evaluator. If you don't know any independent evaluator, in the description of the video, there is a link there that says property team, and fill in your details, Michael, and I'll send you my evaluator that I utilize to evaluate our properties. Okay, this is if it's a commercial property. Again, you see the value that they're going to give you, how much you bought it for, what is the difference here, and the difference between the two is what is called equity. And now you can go to the bank and you can then ask to release some equity. Sometimes you don't have to release the equity. Okay, you don't have to release the equity. You can just go to the bank with your next property, and then they will evaluate to see already that, oh, you actually have X amount of money in equity, so you qualify for the next property. But I like to release the equity, because then I will have cash, hard cash in my bank account, and then I can go to the to negotiate and buy the properties cash, right? I could be buying that dump, the 200,000. So now I can say, hey, I've got cash, so I'm going to give you 100,000 today. You know, that will be my negotiation, my bargaining power. And if the answer is yes, then awesome, right? I've just banked some more money by utilizing the bank's money by doing that. I hope that makes sense. I am going to take the last question before I hit the road. Hit the road, Jack. I'm going to no more, no more, no more. Hit the road, Jack. You know that song? I do know that song. Yeah. Okay, we're having some fun here, and we are talking about everything real estate. I'm just going to my Insta account and see. Afro, how's it going? It's just begun my company property management business. What kind of attorney that can write a contract for us? Okay, I'm not really understanding that question there, but what kind of a contract are you looking for there, Afro? Are you talking about templates maybe to help you to manage your property management business? If the answer is yes, jump onto YouTube, please, and in the description you'll see where it says property professionals. Fill in your details. I will send you out to our attorney, Elise. She is the one who helps out with all of our legal issues. She'll be able to help you out there. Okay, awesome. Last question that I am going to be taking before I go. Right, before I go. Right, Musa, how's it going? Bonjour to you. How's it going? Trust you're doing very well. Welcome to Pass It On. Musa, aka Bianos, right? I have a lead of an investment property in Randfontein. Can you help me put it together? Can you help me put it together? The deal to source it to an investor. The owner is looking to sell the property. Yeah, awesome. Drop us an email there, info@m5 Property Addicts. Okay, that wasn't a question, that was asking for help. So I'm going to jump on into another question, right? A proper question. That was right. James is asking the question, you have a program for 297. What does the program provide? Check it out on our website, www.m5 Property Varsity. It gives you everything else there. And basically what it is it's your baby steps to learn how to do property. Yeah, okay. If you need some more info on it, drop us an email at hello@m5propertyvarsity.com. All right. That is the education piece there. Who was that? Who asked that question? James. All right. James, the question there on the 297, you can send us an email at hello@m5propertyvarsity.com. Ayanda, how's it going? Welcome to M5. And your question there around, I have one question. So after you acquired finance for a purchase of a property, what's the best way then to raise money for renovations if the property requires renovations? Ayanda, in the varsity, we do have a course that is called raising private money. So you learn how to raise private money. So you can jump in onto m5propertyvarsity.com for 297 and get the course that is called Raising Private Money. And you will get that course for 600 Rand, okay? And your 600 Rand, you can dive into around about 12 hours of learning, and you can dive into it this weekend and you learn how to do it, okay? Awesome stuff, right? Okay, I think those are all the questions that I've got from Insta. Resejo, how's it going? From your experience, what is the minimum cash flow one should consider when buying on rental property? Wow, Resejo. What is the minimum? I remember when I was starting off, there was properties that were giving us a cash flow of 500. Yeah, 500 Rand. And that was a lot of money for me those days because I was not coming from a background where I had any money on a deal. There was no money. We used to subsidize even, right? So that 500, how many returns was it? Was it a 10%? Was it a 15% return? Was it a 20% return? So it really depends about you. From a value perspective, it can be an amount, right? These days, do I look at a property that's giving me 500 Rand return? Not really. I wouldn't do that. But when I was starting off, any positive cash flow that I was getting was gold. It was gold because I was coming from a space of I was topping up at the bank, right? So my experience with where I am right now, it's a little bit more. My expectation is a little bit higher because I'm in the game every day. But when you are starting off, start small, learn fast, grow fast. It is I, TJ. We will chat with you in the next videos. It's been great hanging out with you, all of you, today on Pass It On. Remember to pass it on to other people. Cheers. God bless.